Hello, my name is Jacob Neen, the Student Advice Team Leader, and I'm here today to quickly give a presentation on the undergraduate loans which can cover your costs for undergraduate study. So these loans are provided by the Student Loans Company, which encompass Student Finance England, Wales, Northern Ireland and Scotland. For the purpose of this presentation, we're going to be talking about Student Finance England, or SFE, as that is more commonly what our students would fit under. However, if you think you are under Student Finance Wales or Northern Ireland or Scotland, please contact Student Finance Direct, as they do have some slight different rules. So to crack on with the different types of loan, you have the tuition fee loan. This is to cover your tuition fees, and they are paid directly to the university. This could cover your fees in full, or you can get a reduced loan if maybe you want to top up from self-funding or from a sponsorship. You also have the maintenance loan, and the purpose of that is for your living costs. So things like your rent, your travel, going to the pub every now and then, however you see fit with it. This loan is paid directly to you and is paid in 3 instalments at the beginning of each term. With the tuition fee loan, all of our full-time and part-time courses are eligible for the tuition fee loan. If you are intending to study a certificate of higher education, you do need to just make sure that you are studying at least 30 credits. As some certificates are 120 credits, but you can take them over a longer period of time. So just make sure you're taking at least 30 credits a year and you should be fine for the loan for the course. It is not based on your income at all, so there is a universal assessment no matter what your background is, and you can receive a loan of up to £9,250, which is the cap which we can charge for a course at Birkbeck. One key thing to remember is that you can't be what's called ELQ, which is equal or higher level qualification. This means if you already have a qualification, either it could be from years ago, it could be from a different country, which is the equivalent of what you are studying, then you will not be able to receive a loan. There are some exceptions to that. If you study a STEM course, so science, technology, engineering and maths, and you study that part-time, you can still receive funding even though you have this ELQ flag. We've got a page on our website. If you just type in ELQ exempt courses, and it has a whole long list of those courses, which if you do have an equal qualification, you can still get funding for part-time. That moves me on to the years of funding which is actually available. There are different rules for full-time and part-time, with full-time being a lot stricter. So with full-time, you can get the years available for the duration of your course plus a gift year, and then minus any years of previous full-time study you've had. So if you're doing a 3-year degree course and it's the first time you're ever studying that course, you would have 4 years of full-time funding available to you. Duration of the course is 3 plus your gift year minus no years of previous study. So that gift year can be used as a repeat. If you need multiple repeats or you do have years of previous study, there is something called compelling personal reasons, which allows additional years plus the standard calculation. If you think that may be suitable to you, drop us a line in the live chat and we can have a chat in more detail about that. The rule for part-time is a lot more lenient, so you actually get 4 times the full-time equivalent. So if you're doing a 4-year part-time degree, the full-time equivalent is 3. So 4 times 3, and you've got 12 years of funding for your part-time degree. This essentially allows multiple repeats, which, knock on wood, you won't need, but it's a good safety net. It's also a good idea if you are struggling for funding when you're a full-time student, you can transfer to the part-time route, and then you get an open plethora of years of funding to take advantage of. With the maintenance loan, all of our full-time courses are eligible for the maintenance loan at undergraduate. However, only the part-time degree courses can receive the maintenance loan. So that means if you're studying a part-time certificate of higher education, you cannot get a maintenance loan. The maintenance loan is calculated based on your household income, but it also does factor in your parents' income if you are under the age of 25. This is the same even if you do not live with your parent or guardian, their income is still considered. An exception to that is if you are seen as estranged and therefore fully independent from your parent or guardian. There is a special estrangement team at Student Finance, and they're really good, really quick at responding, really supportive. So if you are estranged from your parents or guardian, you can contact them, and then they can go through what sort of evidence you can supply and see if they can get you put as an independent student. One thing to take note of is your partner's income also is considered as household income. So if you are living with a partner, it is your income and their income if you're over the age of 25. To bear note, if you are under 25, you are not estranged, so typically parents' income would be considered. However, you do live with a partner. Luckily, it's not everybody's income put together. The partner's income trumps the parent or guardian's income. So just something to take notice of. In terms of how much you can get, there is a base amount which, if you meet standard eligibility criteria, you can get, and then it tops up to the maximums which we've detailed below, depending on your income and whether you are living with parents or you're living independently. The loan is paid to you in 3 instalments at the beginning of each term, and for first and second year students, or basically non-final year students, the first and second term instalments are slightly lower than the third term, because that's designed to also support you over the summer. I want to take note here that budgeting is a really important factor with the maintenance loan. Because you receive the money at the beginning of the term, you have to make that last for the subsequent 3-4 months. From experience, it is quite difficult at times when you receive, £3,000-4,000 in your bank account, and it's not hard to just, go shopping or go get takeout all the time and things like that. So bear in mind that that amount of money is meant to last you over the next term. So it's really important to think about how you manage your money and some budgeting skills. There are residency requirements for the loans, which differ if you're a home or EU student. For a home student, to be eligible for the tuition fee and maintenance loan, it's a standard assessment. So you have to be a UK national or have settled status, which means you do not have any restrictions on your visa. And you also must have lived in the UK or the EU for 3 years prior to your course. What this does mean is that if you have, for example, lived in Canada for 2 years, you would not necessarily meet these requirements unless you could prove that although you were in Canada, your ordinary residence was in the UK or EU. For EU students, it's slightly different. Typically, an EU student can only receive a tuition fee loan, and they have to have lived in the UK, EU or EEA for the 3 years prior to the start date. However, some EU students are eligible for the maintenance loan if they have either lived in the UK for 5 years prior to the start of the course or are assessed as a migrant worker. We'll be going into more detail later about migrant worker, but essentially if an EU student meets one of those 2 categories, for all intents and purposes, they're considered a home student. So just a couple of case studies for you. The first one is Benedict Cumberblanche, who is 32. He was born and raised in London, and he has lived and worked in the city all of his life. He has a British passport, and this will be his first venture into HE. He'll be studying BSc Maths with a foundation year. Benedict is assessed as a home student and is therefore entitled to a tuition fee loan covering all years of funding, as well as a maintenance loan to help with living costs. The next one is Flanuel Jackson. He is from Spain, but he'd like to move to London to pursue a degree, and naturally he's applying to Birkbeck. He'll be doing an undergraduate degree part-time, but he won't be working as he is very wealthy from being a famous actor in Madrid. Therefore, Flanuel is going to be assessed as an EU student, so he'll be able to receive the tuition fee loan to cover all 4 years of his programme, but he will not be entitled to a maintenance loan. But by the sounds of it, he doesn't need it, so no problem there. And the final case study is Billie Eilish, who's 19. Professional lookalike Billie has been living in the hills of Switzerland for 4 years. Billie will be studying full-time at Birkbeck on an undergraduate degree. Billie will be working at Waterstones at Mallet Street to support herself during her studies and plans to be living in England ahead of the start of her course. So because Billie is going to be working, she can apply as a migrant worker, and therefore she will be able to receive both the tuition fee loan and the maintenance loan. We would recommend that she contact the student advice team as the migrant worker process takes a little bit more evidence and can be a little bit more of a faff. So in terms of just making sure she gets the appropriate support, we would recommend her giving her a call. Okay, just a general quick quiz, which obviously you can't respond to on here, but if you just have a think in your head, can a part-time certificate of higher education student get a tuition fee loan? And the answer is, of course, yes. How is the tuition fee loan paid? Is it to the student or is it to the uni? Yeah, it is directly to the university, so it doesn't go through your bank accounts. So therefore, once the loan is approved, you don't have to worry about it too much because we would go direct to student finance. And finally, when is the maintenance loan paid? Is it at the beginning of the year, the beginning of each term, or in the middle of each term? Yeah, it's the beginning of each term. Again, just to reiterate the point of budgeting, to make sure you are managing your finances correctly. It can have quite an impact on your study if you have maybe burnt through all your cash too soon and therefore struggling with the finances. So please do be careful with that. Okay, in terms of the application process, we strongly recommend that you apply as soon as possible, purely because it can take quite a long time to actually process and approve. It is actually available to apply now. So, after you've had this virtual day, why don't you go online or whatever and apply for it? You don't actually need to have had an offer from the university to apply for the loan. At any point in time, you can change the details of your loan approval. So the course that you're studying, how much you're wanting to borrow, what university you're attending, that can happen really at any time. So if you do apply for Birkbeck for maths, but then you decide in a couple of months, actually, no, I want to do English, that's fine. Your loan will be approved for maths and you can just contact student finance and update your details, no problem. In terms of how you apply, this differs slightly if you are a home or EU student. So as a home student, it is a bit more simple that you can do it all online. If you follow that link on there, or alternatively, just type into Google Student Finance Apply, you create an account with them and you just fill out all the details and you'll be done in about 20-25 minutes. An EU student, however, has to apply via a paper form and post it to the Student Finance Office. You can get the form online via the link I put there, or alternatively by again typing in Student Finance Forms. They'll ask you a couple of questions of what mode you're studying and things like that, and then they will give you the correct form. You obviously have to apply and submit your original ID, so do please apply early. And if you are able to have any holidays, try and time it around when you won't have your passport or ID documentation. Moving on to migrant workers, so these are slightly different. You actually, like I mentioned earlier, for all intents and purposes, you're considered a home student. So you do apply via a home student form. However, you can't do it online. So when they're asking you the questions on the Student Finance Form Finder, go through as a home student to get that paper form. And then with the form, you need to put in your national insurance number, which you should have already had from just before you started working. Evidence of your work, so your contract, the last 3 months payslip, and your most recent P60. And as standard, a copy of your passport or ID card. They do one evidence check at the initial application, and then they also do another evidence check at some point during term 2 or term 3. It's randomised which term they pick, so you might be asked to submit evidence in term 2, but your friends might be asked in term 3. They basically just want to check that you are still working, just to make sure that you still retain that migrant worker status. So when you do send off the evidence, we suggest that you do it all in one go, because if you are sending things at different times, it can get a bit messy. And we'd also recommend, if you're able to post it through tracked delivery, just so you have a little bit of control so it doesn't get lost anywhere with the Royal Mail. In a good period, it can take around 6 weeks to actually approve your loan and return your ID. So this is why we suggest doing it sooner rather than later, just in case there are any hiccups or any more evidence is needed, that you've got plenty of time to get your finances in order before you start in the new academic year. In terms of repaying the loan, this is quite a big a big question for people, and the whole concept of loan and debt can be quite scary. So I hope this can address the concerns you may have. So you only start repaying your loan when you earn over a certain threshold. So that is currently £26,575 a year. Whatever you earn over that threshold, you repay 9% of. So if you're earning £27,575 a year, they will take 9% of that £1,000 difference, and that will go towards your pot of student finance money. The repayment system begins the April after your graduation, so in the subsequent tax year, or April 4 years after you begin, whichever comes first. And for most people, it will just be the April after graduation. But maybe if you have a couple of repeat years, you might start repaying your loan should you be earning over the threshold whilst you're studying. And one thing to note as well is that after 30 years, it's completely wiped. So if you've paid 90% of it back, if you've paid 5% of it back, it doesn't matter. After that 30 years, it's just completely wiped away. I wanted to visualize the repayment in a graph, because it's all well and good talking about numbers, but for some people, myself included, putting it in a nice little graph makes it a bit more visual and is clearer to understand. So in this example, you've got annual income of 26,575, and the repayment is £0. So there's no money above the threshold and there's no repayments. When you're earning £30,000, you have an annual repayment of around £308.25. When you look at the graph, that tiny grey sliver is your annual repayment amount. So £30,000 and you're paying back a tiny amount in the grand scheme of things. We increase your income up to £50,000. You just got a promotion, which is very nice. Your repayment jumps up to £2,108. But again, when you look at it visually, that small grey portion in proportion to the rest of your income is really not a large amount. And you've had a really good few years. You've bumped up to the six-figure salary. Yes, your annual repayment jumps up to £6,500. But again, that grey portion of that chart in proportion to the rest of your income is not a huge amount. Obviously, the higher you earn, the more you pay back, but therefore you are more able to pay it back. So as an example, so Sally has got an annual salary of £28,800. So therefore her monthly salary is around just under £2,500. She will repay £16, £30 or £50. Yeah, £16, which when you think of a monthly fee of £16, so for example, that could be a phone bill. Personally, my phone bill is actually £30. But a £16 phone bill, would you ever give up your phone bill just because you didn't want to get the degree? Or a gym membership. My gym membership was around £16 before I quit, as you can tell. And again, that is something which for some people is seen as quite a crucial element to their lives, and they're not willing to give that up. And it's only a small monthly payment. Or maybe going to a restaurant once a month. That could be a main meal. It could be 2 main meals if you're going somewhere cheaper, or maybe a starter if you're a bit more fancy. Depending on what your costs are, that sort of monthly payment in reality is not actually that heavy duty. So a couple of key points about repayment. If your income falls below the monthly threshold at any point, your repayment will stop. They are deducted automatically through the PAYE system, so it will come up on your payslip underneath the taxes. However, if you are self-employed, it will have to be on your tax return when you self-declare. You can, if you so wish, make voluntary payments. We would usually recommend not to do so, in the sense that the monthly repayments are quite manageable and quite easy. And if you're making voluntary payments, you might actually be paying too much in comparison over the duration of that 30-year period, or however long it takes you to pay off. But that's up to you. Maybe you win the lottery or something. And finally, interest will be added at the retail price index plus 3%. That's whilst you're studying. When you've completed, the plus 3% fluctuates between 1 and 3, depending on your earnings. So if you're a high earner, it will be RPI plus 3. If you're a low earner, it will be RPI plus 1. I just wanted to leave this statement here. If people haven't heard of him before, Martin Lewis created the Money Saving Expert website, and he does a lot of stuff nationally for money saving tips for the country. He has got this angle of student finance where he's actually been writing to the government and he's been doing petitions of trying to rebrand the student loans and basically get rid of this concept of the loans and the debts, which sound really scary and have got really negative connotations, and instead change it to the Graduation Contribution Fund. His articles, if you can just type them into Google, they're really interesting view of looking at debt. So what in one of the quotes is, "The language of debt is misleading. No, this is a contribution system in proportion to your financial success after university." He has some examples in his articles where people are saying, okay, you're going to walk out of university with 50, 60, 70 grand worth of debt, but then you actually look at the earnings and how much they're repaying and it's nowhere near this figure. Let's say it's just a number out of my head, £20,000. You wouldn't therefore say, oh, I've walked out of university with 60 grand worth of debt, whereas when it gets cancelled after 30 years, you've only actually paid 20 grand, for example, which is still a lot of money, yes, but it's less scary and is a lot more manageable than people often think before they actually walk into it. So I'd recommend reading his articles if you've got the time. And here's just some contact information for you. The student advice team are the main service at Birkbeck who offer financial support for students. So if you have got issues with student finance, you want clarification, because sometimes they can give a bit conflicting advice, or if you're having any troubles, just please let us know and we can help support you through that process. And we've got social media handles for when things get released and we have new updates. It's usually the first place we put information, and the student finance number at the bottom in case you need it. Okay, thanks very much.